I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, CEO and President of InsideTrack.com. Welcome back to the show, Eric.
Thanks for having me, Jim. Great to be back.
Eric, you're a big studier of cycles, and you say the cycle that we're in right now in the stock markets gives you a sense of deja vu going all the way back to 2000, 2001.
That's true. There's a lot of similarities between the two. When I have described that for my readers, what I'm really trying to convey is that I believed, and I started publishing this back in late 2014, early 2015, that we had culminated a major multi-decade generational upswing in stocks, what I labeled an inflationary advance going back to late 1974, a 40-year cycle of inflationary stock market advances. But what I thought we would see for the ensuing 2 to 3 years in 2015, 2016, and 2017 was a market that closely resembled what the Dow Industrials did in 2000, 2001. And back then, even as you had the dot-com bubble bursting and the NASDAQ 100 plummeting, the Dow Industrials were very volatile but not really showing much direction. And for really 15 to 18 months from their early 2000 peak, every time they would see a 2 to 3 month sharp sell-off, it would immediately be met by an almost equal 1 to 2 month rebound. And each of those sell-offs would retest the previous lows, maybe spike below them by a little bit to get the bears really worked up, and then on a dime it would turn and head back up and look like it was getting ready to take out the previous highs. And just as it got close to those highs and the bulls were feeling re-energized, the market would stop, hesitate a little bit, and then start to enter a new decline. And it did this really from the first quarter of 2000 all the way into or through July of 2001. August was when it started to give a little more of a defined downtrend, almost like the market could sense what was coming up in September of 2001. And that was when the market started to give a bit more of a defined downtrend. But even then you saw a sharp rebound after the September 2001 lows, but this time it only retraced about 50% of its previous decline. And then you saw the more convincing drop into late 2002. And I just thought that we would see a very similar stealth bear market like that would keep the bears and the bulls confounded for a year or more from the early 2015 time frame. And it's just been uncanny to me when you make some comparisons between now, the last 15 to 18 months, with what happened in 2000, 2001, and you look at the time frames of specific moves and the percentages of them, it's really uncanny how close the two time frames have paralleled in what's gone on in the Dow Industrials and even the Dow Transport. For instance, even going back to 2000, that was when most of the indices peaked, but the transports had peaked much earlier in May of 1999. and they saw an initial 10-month drop that really ended up being the majority, the lion's share of their overall decline, and a lot of that was before the other indices even peaked. Fast forward to 2015, you have the transports peak again about 6 months before all the others. They peaked in November of 2014, and they saw an initial 9-month decline that encompassed more than half of what I've been projecting as their downside objective. So it's very similar to 15 years earlier. You take that parallel a little farther. In 2000, the Dow Industrials saw 2 sharp, significant declines during the first 9 months of their bear market. And the second low retested the first low, and overall the drop was 17%. Fast forward to 2015, the Dow experienced 2 sharp, significant declines again in the first 9 months of its bear market, just like in 2000. The second low, which took hold in late January, retested the first low from late August of 2015, and the overall drop was 16%, just 1% different from what that similar 9-month sequence was back in 2000. And that brings us to the present and some of the expectations I've had for the market in late January through early April. Back in 2000-2001, the Dow rebounded for 2.5 months and gained 15%. Applying a similar pattern to that, I was looking for the Dow currently to rally about 2.5 months, which would take it up into early April, and about 15%, which would take it up to 17,800. Well, lo and behold, here we are in the first full week of April. The Dow has now fulfilled that 2.5 month rally, and it's peaked right at 17,800. So it's, again, done almost an exact parallel to what it did 15 years ago. And my outlook for the current time frame, unrelated to these cycles, actually this is due to a lot of other technical indicators and intermediate cycles I have, has been that we would see the next significant drop from early April into late June, and a significant low in late June, which would be about 5 months from the late January low. Well, back in 2000, 2001, that's almost the same thing that the Dow Industrials did. They saw a very sharp decline and set their third consecutive low 5 months from the previous double bottom. So it's just this ongoing analogy or analog market between the current time frame and 2000, 2001, which is just corroborating to me what a lot of other indicators, cycles, and expectations have said for this whole period going through 2017. So I'm not relying just on that parallel. That's really actually only a small percentage of the work that's leading to my current conclusions, but it's also a very strong corroborating and validating factor that I find hard to ignore, just the uncanny similarities between the two time frames.
Do the so-called FANGs, Apple, Netflix, Facebook, and Google, represent the same kind of stocks that were the darlings in the high-tech sector back in 2001, 2000?
I don't think so completely. I think there are some similarities, and, if you look more, probably a better comparison would be to just take out all of the social media stocks, throwing in Twitter in there, and as opposed to Apple, which has plenty of its own established, proven income generators for a couple decades. back in the dot-com bubble, there were so many companies that had no earnings, and everything was being valued on expectations and future alleged earnings. And, even though some of your social media, like Facebook, has certainly started to monetize a lot of that potential, there are others that have struggled with that, and, some of those stocks have been a little bit closer parallel to what happened back then. But I don't see the FANGs as being a really strong correlation to the dot-com bubble stocks, like I said, many of which had nothing except for expectations governing their value. One other similarity that's becoming very intriguing to me to that time period is here in the U.S., when did we have the most uncertain and controversial election cycle in the last 50 years? It was the hanging Chad election debacle of 2000, and we certainly appear to be on course for another very uncertain, maybe even more uncertain and unsettling election cycle, which, appears to be headed to start right in July with the Republican convention, and the likelihood growing that you're going to have a contested convention. So not that the events are going to be the same as back in 2000, but the idea of some real strong conflict and controversy and instability in the markets surrounding the election cycle is a strong parallel. And as they say, events and markets, they resemble, but they don't repeat what they've done in the past. So you're looking for some similarities, but also some important distinctions. So I'm going to be watching the election cycle here in the U.S. Of course, there's other things that are likely to add some uncertainty to the markets even before that, like the whole topic of and vote on Brexit in Great Britain in June as to whether they're going to look to exit the European currency and union or not.
And of course, too, with the possibility Britain may withdraw from the European Union, that affects markets all around the world, doesn't it?
Yes. And a lot of that initially is perception. Okay, what does that mean for many of the other members of the EU, and especially those that economically might be on the bubble? Does it start to turn focus back again to nations like Greece and even the whole PIGS group, which you really haven't heard much in recent times. But, if equity markets and global economic numbers continue to roll over and show signs of weakness, that's when you normally get focus on things like that, like on the PIGS and whatnot, suddenly taking center stage. When the economies are doing well, some of those problems are hidden for a little while, and then you get some more negative financial and economic numbers, and all of a sudden you realize those issues were there all along. They were just kind of masked by some rosy-colored or rosy-looking expectations.
We'll have more with Eric Hadik right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Eric Hadik. Eric, you said the springtime is kind of a whole natural cycle too that seems to encourage erratic behavior, such as the terrorist attacks in Belgium, and that also affects our markets.
Yeah, I have written about this for probably the last 20 years or so, and there's a couple phases or a couple different focuses I have within what I define and others define as the first month of the natural year. And really, the natural year begins with the vernal equinox, the start of spring, that March 20th, 21st date. And that was something very important in a lot of previous cycle analysts' work. I'm thinking in particular W.D. Gann, who back in the early 1900s did a lot of work in cycles. And back then, the primary commodities were your agricultural-based ones, so that start of the natural year really was the start of their fiscal year, for lack of a better term. But it's also, as you alluded to there, it's a time when you do see an increase in what I term aggressive behavior. And you go all the way back to the Old Testament and quotes applying to the same time frame, and it talks about at this time of year when kings went off to war. And it references that multiple times, and it's referring to this specific time based on the Jewish calendar and based on other ancient calendars. And even going back to or looking at our own calendar, named for Mars, the god of war, the month of March, and the festivals in ancient Rome that were focused on that, the god of war, and there was one period there that I think was a 5-day period, and 4 of those 5 days had gladiator battles and just all of this extremely aggressive behavior. And I have linked that, kind of shown how if you looked at the natural year like you do a calendar year, and you look at the first month, because to me the opening range of every year and even every month and every week, there's significance to that as far as giving indication of what the whole period is going to look like. And so the first month of the natural year, to me, often gives a very clear indication of what to expect for that overall natural year. So in this case, from late March 2016 through late March 2017. And the first month of that natural year culminates on April 19th or April 20th. And like I said, I've written on this back in the late 90s through the 2000s. I revisit this topic just about every year to remind my readers that particularly in the U.S., but also globally, that date, April 19th, has been so significant in America's history, and always dealing with extremely aggressive behavior, whether that be wars, terror attacks, and you look at it, April 19th is also known as Patriots' Day in the Northeast, and that's when the first shot of the Revolutionary War was shot in 1775. April 19th is also the first bloodshed in the Civil War. Within a couple days of that, and that's, I don't get too precise, although many times it comes up right on April 19th, but within a few days of that, you can pinpoint the start of the Mexican-American War, start of Spanish-American War, and then jump forward a little bit, and one of the most significant things where currency is concerned, that is also the exact date in 1933 when America abandoned the gold standard. Within a couple days of that April 19th date, you also have the failure of the Bay of Pigs invasion in Cuba. You have the end of the Vietnam War. And then between then and the current time frame, the largest battle of U.S. warships since World War II took place on that date. I think it was in 1988. But then as you come into more contemporary times, it identified many of the really significant domestic terror attacks in America, including the starting with the Waco Branch Davidian debacle. I'm not saying that's the terror attack, but the whole debacle there, but then the Oklahoma City bombing, the Columbine high school massacre, and fast forward to 3 years ago, the Boston Marathon bombing, which took place on April 15th, and April 19th was really, to me, a very significant event where basically that whole town, I believe it was Watertown, Massachusetts, was, for lack of a better term, was martial law. It was, people were locked in their houses as they were narrowing in on the second bomber and finally captured him. And what people don't realize, because it was so overshadowed by that, and because it really was not given much media attention, at the same time, there was a very significant attack in California on April 15th, 2013, and the Wall Street Journal, about 6-8 months later, did a very extensive expose on it, and even then, people are ignorant to it, but it was this attack on a power station, the Metcalf power station in just outside of the Silicon Valley, that fed power into the Silicon Valley. And when you read the whole write-up of it, it's just incredible to see the sophistication of it, because initially some people were saying, oh, it's just some drunk teens or some good old boys or someone wants to go out there with their rifles and shoot up some transformers. But in reality, it started with them having to break in and cut fiber optic cables in an underground vault, and to delay any communication of this attack. When they surveyed the area afterwards, they didn't capture anyone because all the shooters were able to escape within 60 seconds of when the authorities got there. And by using some surveillance cameras nearby, they were able to identify that there was signaling going on with lights between the shooters and the identification of emergency responders coming. And they didn't go right for something that would have caused a big explosion and drawn attention. Instead, they shot out 17 giant transformers where they would be profusely leaking oil long enough to allow the attackers to escape, and then it would overheat the transformers and shut down the power station. And many viewed it as a kind of a test incident. But anyway, it was just another one of these attacks, this aggressive, I call it the date of aggression, the April 19th date. And it's just incredible to me how much has occurred around that time frame, but it's the culmination of a 30-day period when that aggressive behavior really starts. And this year we had the Brussels bombing start right at the beginning of that period, March 22nd, and usher in a very precarious 30-day period and a very precarious natural year when I expect to see similar things unfolding on an escalating scale. And really, for me, it reinforces focus I have on this date of aggression next year in April 2017, when a lot of bigger cycles come into play, and I think is an even more precarious time.
Eric, what's your intermediate forecast for gold and silver?
I'm still sticking with my outlook that gold and silver fulfilled their initial 2 to 3 month upside objectives in March, and that they would be going into a corrective phase. And the interesting thing to me is that my cycles in precious metals, and that's gold, silver, platinum, even related indices like the XAU, they all show me the potential for a bottom around April 15th to April 19th. And what's also kind of piqued my curiosity is that my work in oil markets are also showing a higher likelihood for a secondary low in that same time frame. And so kind of combining all of that with what I just described about the volatile nature, the aggressive nature of the days surrounding April 19th, I'm going to be closely watching those markets, watching events. Obviously, you're not going to see events till they actually unfold, if they unfold. But it's interesting to me that gold and silver and even oil markets are saying that's when the next significant advance should take hold. And it's funny because I've done some comparisons to gold and to its previous recent years, and the period between mid-March and mid-April has been very similar in each of the past 3 years, where gold saw a 10 to 15% sell-off. And if you look at the gold market back in 2013, it was interesting to see it had its sharpest sell-off the 2 days right before the Boston Marathon bombing, and then it bottomed right there with that event and began a significant rebound from there. So it's that whole idea that I've talked about and which has proven itself time and time again, that the markets often give you some indication of fundamental events on the horizon. And that's one of the reasons why cycles play such a key role in my overall approach to the markets.
Eric, thank you very much for chatting with us.
It's been my pleasure, Jim. Thanks for having me again.
My guest has been Eric Hadik, CEO and President of InsideTrack.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments and questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.